When understanding Bitcoin's price action, it's always worth looking at the Pi cycle top indicator. It was a very useful indicator in giving us an insight into the bull market peak occurring right over here in this crossover, but we can also learn a lot of interesting tendencies in the beginning of a market cycle like we are seeing since the 15,500 bear market bottom. What can we learn from this Pi cycle top indicator this early on in the cycle? That's what we're going to be talking about today. Subscribe to the channel and let's dive right into it. And of course, like the video if you enjoy videos just like these. Let's talk about the Pi cycle top indicator. So when we look at generally periods in the Pi cycle top indicator, really important to just look at pre-halving dates because that's where we are in the cycle right now. So we're in the current cycle of 2016 to 2015. So right over here, this is where we are in the cycle, and you can see here oscillation around this 111-day moving average before we actually spring above it and hold it as a support and then hold it for all the way until the bull market peak. That was the case in the pre-halving year of 2015 to 2016, and as you'll notice, once we got to 2016 right over here, that's when we really got back above this 111-day moving average and held as a support going all the way to the bull market peak. So essentially during the pre-halving year, oscillation around this key moving average, but in the halving year, that's when we actually managed to hold it as a support all the way to new all-time highs. So going on to 2019 to 2020, same thing. We managed to hold above this moving average without really retesting it, and of course we have to kind of narrow this down to around here. So lots of oscillation around this moving average before in the halving year dropping below this moving average and then managing to reclaim it as a support and then holding this as a support all the way until the bull market peak right over here where we saw a crossover which denoted this bull market peak. We held around these levels until finally rejecting at 69k and then beginning the bear market. But once again, 2023 is the pre-halving year. We oscillate around this moving average. We really just oscillate around it. So the key takeaways from a pre-halving year in terms of its behavior to this Pi cycle top moving average is oscillation, rejection as a resistance, holding as a support here, losing it as a support, and then breaking above it, going into the new halving year where we hold as a support. And 2019 as well, going into the halving year, rejection, losing it as a support, rejection around this area, holding it as a support, deviation, losing it as a support going into the halving year of 2020. But once we are in the halving year, rest assured, we're not going to lose this level as a support, and that's one of the key takeaways for this cycle, because right now you can see all of 2023 really oscillation around this moving average, and now we're actually breaking beyond the Pi cycle moving average, and of course we could generate some sort of move, and of course at the moment the moving average is 28k roughly speaking, so we might see some sort of move generate from this. But what's possible is that we could potentially drop back into this moving average, maybe even lose it once again still this year. Lots of oscillation around this moving average is possible going into the halving year, but what's possible going forward in the halving year of 2024 is that we'll probably manage to hold above here, just like we did in the halving of 2020. Of course, we did see a downside deviation before we finally enjoyed liftoff, and also in 2016, managing to hold above this moving average here, going all the way to new all-time highs. So the key takeaway here is that oscillation around this Pi cycle moving average is probably going to be on the cards for the remainder of the year. But once we get into that 2024 year, that's where we're probably going to maybe see one last flush below this moving average, like we saw in 2019 or 2020, apologies, this COVID fueled crash. So could we see something like that? Maybe it doesn't even have to be a black swan event to promote such a retracement. But generally speaking, in the new halving year, some sort of downside deviation, whether it's a small deviation, whether it's a larger one, generally holding that level as a support as we go after the halving, because May 2020 is when we were actually still pre-halving, and some sort of deviation below this 111-day moving average is possible going into the halving. But after the halving, we just hold support quite nicely. And same thing here. After the halving, so let's just zoom out. After the halving in July 2016, whatever downside deviation we were able to get, and there was a small one here, generally price stability was sustained here, and after the halving we just managed to hold all the way to new all-time highs. So the key takeaway here is that oscillation for the remainder of this year in and around this moving average is possible, but in the new year, going into the halving event, let's say somewhere around here, it's going to be April 2024, if we get some sort of downside deviation below this pi cycle moving average just before the halving event in 2024, that's going to be the last downside deviation below the pi cycle moving average before we rally and hold this support, this moving average as a support after the halving, and we sustainably hold it throughout the remainder of the cycle all the way to new all-time highs. So that's something really to keep in mind, because at the moment we are still in the pre-halving year. So when looking at the 4-year cycle, we're in the candle 3, just like we were in 2019, just like we were in 2015. And this candle 4 here is the downside wick that occurs earlier on in the new year. So 2016 is the year of the halving, 2020 the year of the halving, downside wicking early on in the new year, and we might see downside wicking early on in the 2024 year as well for candle 4 before rallying towards the upside. And that downside wicking on the 4-year cycle on this candle 4, that could occur with some deviation below the pi cycle moving average, because that's still going to be before the halving. But we're really running out of time, we're really running out of space for deviation, because while we might still see some oscillation until the end of the year, that final deviation below the pi cycle moving average just before the halving in the new halving year, we're running out of that opportunity. We might not see that, we could see it, and that's something to really keep in mind, that there is that scope, that possibility for deviation below the pi cycle moving average. But once we're after the halving, we won't see those sort of deviations, because price is simply going to hold this level as a support. And this video has been pretty much focused on showing you what it's like before the halving. So pre-halving period, oscillation around the moving average, then staying above this moving average going into the halving event, but slight downside deviation below that moving average. But after the halving, it just holds as a support all the way to new all-time highs. And the same thing happens here as well. Deviation, oscillation around this moving average, last downside deviation in the halving year just before the halving, but after the halving we just hold this as a support, and it's probably going to be the same thing going forward as well. Lots of oscillation in the pre-halving year, maybe that last flush and deviation below the 111-day moving average in the halving year just before the halving, but after the halving, this is what we're gonna probably have to expect, holding as a support, never losing that moving average as a support. Same thing here, holding it as a support all the way to new all-time highs. So really, this next period of a few months might entail oscillation for the rest of 2023 around this moving average. And then early on 2024, just before the halving, maybe that last flush. But after the halving, we're just going to be holding this level as a support, this moving average as a support all the way to new all-time highs. That has been what we've seen in the past, and if history repeats, that's something we can expect going forward. Thank you so much for watching. Subscribe to the channel for more videos like this in the future, and feel free to check out the top right hand corner video for another topic that we've discussed, which I think you might find interesting. Thank you so much for watching, subscribe to the channel, and speak to you soon.